Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right. It's Finder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right. It's Finder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edgefinder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. All right. Good morning, everybody. Welcome back. Happy Wednesday to you. It's a busy Wednesday. Things are actually heating back up in the markets. We got more stuff to talk about. Yet the last few days have been really quiet. Not a whole lot of market volatility. Actually, there has been some in the stock market. We've seen some selling in the stock market. We saw Google earnings and Tesla earnings. I want to talk about those things today. I also want to discuss what we're looking at globally today. So we had PMI numbers come out of the Eurozone as well as the UK. So we're going to be discussing a lot of different things here in the live stream. As we get started, I want to just say thank you for being here and hit that thumbs up button on the stream. Let's get into some markets. Okay, so first of all, let's do the PMIs. So PMIs, remember, for the new traders or new fundamentalists in the audience, PMI data, today is PMI day. We've got PMIs coming out of the US, PMIs coming out of Europe, and the UK. So, which is part of Europe, but you get my point. We've got PMIs all the way around. And so it's going to be a really interesting thing to see how this plays out. Now, so far, we've already had PMI data out of Europe. So let's discuss that a little bit. So we had French and German PMIs, which of course, Germany and France are like the big powerhouse components of the Eurozone. And we could see that PMIs came in lighter than anticipated. The services PMI for Germany also got revised lower on the previous number. So the theme here does seem to be cooling PMIs. Now we had some stronger than expected French services PMI, but for the most part, we see a lot more red here than we do green. And you do have a little bit more, strength in the UK. Actually, I'm just curious if we look at Euro Pound, is this down today? It is. Okay, so let's talk about what these numbers mean for a second. Then we'll get into the US PMIs, which are coming out in just a few minutes here. So with these PMIs, what are PMIs? If you're new to this stuff, what is that? PMIs are purchasing managers index. And the reason they matter is because the purchasing managers index for the manufacturing and services parts of the economy give you a good indication of what people in positions of hiring and purchasing and decision making within companies, what their outlook going forward is. So let's just say, I always like to think of this as like, let's say you're a, I don't know, like let's say you're working at a factory, and this factory that you're working at, let's say that you are, you're working at a factory, and you're the decision maker there. Like you're in charge of operations. If you are thinking, okay, things are good and we're making money and we're going to be hiring, we're going to be buying more things and stuff's coming in, all directions to the manufacturing. We're going to hire more people. We're going to spend more money. We've got big orders coming in. If that's you and you got asked in that moment to give some feedback on your outlook's probably going to be pretty good. If you're seeing a lot of demand for your business, if things are really flowing at the manufacturing plant, you're going to indicate so if somebody were to request your feedback, right? So PMIs, why I like them so much is they're kind of forward looking. If you ask someone who's in charge of hiring and spending and all that about what they're going to be likely doing in the future, that's a forward-looking indicator, which is why PMIs are one of my favorite things to keep an eye on. PMIs are pretty powerful for moving the markets too. So PMIs out of Europe showed generally consensus was more cooling expected than strength. Does that make sense? If that was helpful to you, if the PMI breakdown was helpful there, do me a big favor and just hit the thumbs up button on the stream. Support what we got going on. Let's see if we have any fun sounds today. Let's try a soundboard sound.
Ivan helped me see the light.
That is so true. Ivan did help us all see the light. If you guys know Ivan, he is a heck of a guy, regular contributor to the A1 Trading Show. Anyways, so again, PMIs are really important because they show us what purchasing managers forward-looking guidance is looking like. And the PMIs are so important that on the Edge Finder, we've dedicated pages just to studying them. So services PMIs, right? We can select if you're someone in, in fact, I want to broaden this a little bit. I think 6 by default is too little. So here's what we're going to do. We're going to broaden the default range on this. Let's go. I'm going to make it 12 months because I think it's nicer to have 12 months of data on the screen by default. So we've just fixed that. Okay, so we're looking at this and we say, all right, here's how PMIs in the US have been looking. PMIs have been pretty strong in the services part of the economy. Remember that with PMIs, a way to read this is that when it's above 50, it's a growing or expected growth. And if it's below 50, it's expected decline. Recently, we've seen a couple readings that have dipped underneath 50, which has been broadly accepted as, hey, the economy may start to see some slowing. Not crashing, it's not like we're in like low 40s or anything like that, but here's manufacturing. This is the manufacturing part of the economy. And we can see that manufacturing has been pretty consistently in decline. So services is a big component of the US economy as well as like the UK economy. And by the way, you can select other things here. So if I go to European PMIs, you can see that European services PMI has been pretty strong. Let's go take a look. And also we got to repeat our function there of, you can see European manufacturing PMI has been much, much lower, much weaker for some period of time now. I'm just going to default this, by the way. I'm going to change this, Edge Finder users, just a little bit of a live edit. I'm just going to change that really quick. So the default now will be 12 months look back period. You can always change that if you're an Edge Finder user. Just go there and check that out. So PMI data, again, very, very important. In 15 minutes, we get the US PMIs, which could be very, very interesting, right? We got a quote from James or Chandler.
You want to see PNL? I don't have it right now.
I love that one. So yeah, let's keep going. So we then take into account the PMIs. And weak PMIs out of Europe today were strong for gold. How do we score this? What are you talking about, Nick? Listen, here's the thing, okay? If PMI data is coming in cool, that's showing economic weakness. Economic weakness makes people slightly more favorable to gold as people lose certainty in whether or not the central banks of the world can properly stop a recession or stop, inflation getting out of hand. Remember that if the economies of the world start slowing a lot, the theory is that they may print a bajillion dollars, euros, pounds, yen, etc., to try and stimulate the economy. Massive spending of money equates to gold going up in value usually. Right. So if we see like in 2020, remember 2020, guys, have you seen gold during 2020? Check this out. 2020 was the year of spending by the central banks globally. Look what happened to gold during that time. Gold skyrocketed off of fears of the economy going down, as well as massive money printing. It was a very bullish period for gold. It's why I think that we could see, with central banks looking to cut interest rates again, like they did in 2020, it's for a different reason. We're not going into, a COVID situation, but we are seeing the economies of the world, as I just indicated through the PMI data. We're seeing some cooling in the global economy. And with that cooling, it could lead to gold looking good. That is, long story short, that's part of the reason why I'm long on gold. It is also popping up on the top setups page, which has been, helping me find the setups that I take each and every day on my show and in my own trading. Also, while we're on the topic, I should mention that we just kicked off a resumption of, or a last call, if you will, for our summer discount sale on the Edge Finder. We are currently doing 50% off of the Edge Finder. And if you're somebody watching here right now, if you like the tools that we use on these shows, if you watch my videos, or you see other traders using the Edge Finder, or you see our analysis videos or our newsletters, we're constantly using this tool. And currently, for viewers of the stream right now, we're going to kick it up to 55% off of the Edge Finder. That is our biggest discount that we do all year long, and that discount is ending soon. So if you're watching right now, here is your chance to get the best discounted price of the Edge Finder all year long. You won't get it lower than this. This is it. Take advantage. Click this link that's just been dropped in the chat, and you'll be connected to a real person on my staff who can answer any questions you might have about the tool, as well as get you set up with a copy for a super discounted rate. Again, it knocks off a ginormous amount of the cost, and this is only available for a very short period of time. So if you're somebody who likes the tool, you want to get access to it, take advantage of these prices while they're available, and then they will no longer be available. So don't miss it. Next up on the radar here today, again, is the earnings that we saw yesterday. Someone just asked, what about Tesla earnings? We will discuss them because they matter to the indices. The indices are down today. My NASDAQ trade is not looking too hot. The S&P 500 down 1%, NASDAQ down 1.6%. And it's possible that I could get stopped out on these trades if we continue to see indices roll over. I've got a good trade going and a couple not so good trades going right now with the rollover in the indices. So we'll discuss all of that. Let's talk first about Google. Google actually had rockstar earnings, and this is where people get very confused because earnings for Google came out very good. In fact, hold on, there we go. So earnings for Google were good. You can see that if we take a look at earnings on Google's side of things, the earnings came out at $1.89 per share, which was stronger than anticipated. Their earnings were good. Earnings were higher than anticipated. They beat on how much money they made. They also beat on how much revenue they generated. Their revenue was up and their earnings was up. So, Nick, the market is manipulated because the stock is down today. Google's down 5.3% in the pre-market here. Actually, the market just opened up. It's down 5.3%. The market is manipulated. It's all a scam. No, that's the thing, is what is confusing to new traders is they might say, well, Nick, Google's earnings were bad. I'm sorry, Google's earnings were good. Why is the stock down? The reason is because the expectations for these mega tech companies are so high that it seems like as we go into this earnings season, not only do you have to have great earnings, you have to have stellar guidance and impeccable earnings. And so the market might just say, hey, it wasn't impeccable. It was good earnings, but it wasn't impeccable. It wasn't perfect. And so we're going to sell off the stock. Not only that, we also saw Tesla, who actually had bad earnings. And you can see this is what happens when the stock has poor earnings. Their earnings were bad. Check this out. Tesla missed on their earnings pretty big. So they were expected to come in with 61.4 cents per share. They got 52. That's a big miss. So they missed on their earnings. Revenues were about in line, but they missed how much money they made. Not only that, I didn't listen to the call with Elon, but Elon Musk, I guess, was making a lot of changes within the company, and that uncertainty may also have contributed to a little bit of uncertainty with the stock price. So we see Tesla down just shy of 10% on the day. Very violent sell-off on Tesla. And, this is the reason I bring this up is that this is leading to the market today selling off. Remember that tech earnings are so important to this market continuing higher. If you don't get good tech earnings, it's going to be rough. And this might actually be the time where I get stopped out of the NASDAQ. So if we go lower, if we continue to break lower today, that is going to be a signal for me to go ahead and say, whoops, this was not a good entry. Turns out earnings were not as good as expected for some of these key players. And that's just going to be me getting out of the trade. In fact, I actually wouldn't mind if I get stopped out. My next entry point that I would probably try for would be down in the 19,000s. I would actually really like to see prices get down there, in which case I could probably get some good risk to reward. So if I get stopped out of NAS, it is what it is. If I can stay in the trade, I will certainly do so as well. But down almost 2% on the day, NASDAQ taking a hit. Gold making a nice push off of its levels. So, I've got a winner on and a loser, but definitely a red day for me because the NASDAQ selling off this hard is definitely offsetting any gains that I'm making in gold. But gold is certainly still holding support here. Very happy to see that. And with gold, I'm going to stay long on this one. And what might end up happening is, here's the cool thing about trading with a good risk to reward approach. I might get stopped out on the NASDAQ. And if gold rips, it'll make up all the lost ground. That's the cool thing about, if you take, it's always about moving on to the next trade. So even if NASDAQ doesn't work out, next trade, right? Just keep your head down, next trade, next trade, next trade. As long as you're trading a system and you do have a definable edge over the long term, which I know I do, right? Because I've traded for a number of years. My account may have periods of up, may have periods of down, but over the longer term, my account has drifted higher in net P&L. I say that because, it's important to mention that you're going to have, even in profitable systems, you're going to have periods where things are not working out. But fortunately, we've got gold here, which is really helping to pick up some of is putting the team on its back for my NASDAQ trade right now, at least. So we'll see. At the same time, I'm also short dollar Swiss, which this trade is going very well. In fact, this is a great opportunity for me to potentially get my stop loss trailed further into profit today. And are yields? Oh, yes. By the way, guys, we got about 5 minutes to go before we get some intel on US PMIs. So please note the US PMIs could completely reverse what's happening in the indices today, or it could make them worse. Or same thing with gold. It could reverse this gold upside move. So I guess I actually have a couple winning positions on and a couple losing ones. Today I have 3 things moving positively. And I think, 3 things moving not so positively. So it's a mixed bag day. Some of my more tech heavy ideas are not performing as well, but the gold and TLT trade and USD CHF trade, those ones are doing really well. So mixed day for me. Not a positive day though, to be completely fair. because I am a little heavier on the tech side. But we'll see. This might give me a chance to get some better entries. What's TLT looking like? Yeah, let's look at TLT. So TLT came down to the support level. I am long as about over here. I'm long about over here. We'll see if this one can hold with PMIs coming out in just a minute or just a few minutes. That should be really interesting. Gold is making its move today, which is awesome. Finding support right around this 2,400 level. What I'd like to see for gold would be, can we get back above this level here? And if so, maybe we put in some sort of higher low. Can we get back to the highs? And can I stay in this trade? I caught this whole move here, ended up trailing out right there. So I gave back some of the gains, but then I ended up getting back in. So I've actually played this decently well overall. And if we see a push through these highs, then this will be a really nice winner for me. Theory there is the economies of the world slowing. This has been my theory for a good chunk of the year. If the economies of the world are cooling down a little bit and we see central banks trending towards rate cuts, that's a good story for gold. That's a good story for TLT. That's why the rate sensitive stuff I like. Now, the problem is if you get the growth side of the story hurting on the earnings from companies and the economy starting to slow, it's not so positive for positions like my NASDAQ idea. So we'll see. I'm going to watch these things close. We've got PMIs coming out in just a few minutes. Let me just also mention and reiterate, remember, if you're just tuning in, we are doing our 50, I almost said 40, but I know it's 50. We're doing our 50% off discount on the Edge Finder. I mentioned this earlier, but just for people who are tuning in now, we're doing 50% off the Edge Finder currently. And for stream viewers during this PMI live stream, we're actually doing 55% off for you guys. So if you guys want a copy of the Edge Finder, get access to our top setups page, the commitment of traders data, right? You can see the COT reports week to week in our broken down thing. We can see what institutional money is buying and selling on a week to week basis. You can look at our smart money indicator, retail positioning, bank forecast. We got our put to call ratio. In fact, put to call ratio has been interesting. We've seen very bullish overall moves, but then recently volume for puts has started to increase. We also can see our seasonality scanners. We have all of that GDP and PMI and manufacturing PMI, all that data we discussed earlier. We have labor market data like NFP charts, so much more, all in one platform. So if you're an aspiring fundamentalist, you want to get access to data, today is your chance. You could have the tool in like 30 seconds. Just using the link, you can chat directly with us and get 55% off for the biggest discount that we're doing all year long. It is our summer sale and it's ending soon. So don't miss it. Take advantage of that link while it is available. So it's in the chat right now. Speak to a member of our team. We'll get you set up with that discount. Okay, PMIs are just 2 minutes to go here. We'll see what this brings for us. I'm going to go ahead and switch over to the all markets view so we can keep an eye on this. All markets. Again, it's a very mixed day for me, mostly a red day for me for sure. But I've got some things that are working really well. Like gold is flying today, which is fantastic. And then I've got things that are not working well, which is like my NAS longs, which are looking silly right now. But we'll see if we can get a better entry price. Actually, at this point, I actually want the NASDAQ. Just go ahead and sell off further, then I can find a better setup. So I'm open to the NASDAQ going lower. It would be actually nice to see a nice, more corrective pullback. 1.5 minutes to go, guys. We are counting down to PMIs out of the US. What's it going to do? How's it going to move the markets? We will see. Again, no prediction of what's going to happen. I try to reiterate that because you always get new people who tune into these things and they're like, which way is it going to go? And no one knows this data ahead of time, at least not on the retail side. Maybe someone up in the ivory towers knows what's going to happen, but you and I, we don't have the luxury of insider trading. So we are waiting to see, and we're going to analyze and find trends following the data. Don't leave. A lot of times people will leave right as the spike finishes because they're just, I call them spike junkies. Don't be a spike junkie. Stick around, hang out with us, and let's break the charts down a little bit after to really set up for, what may actually be economic trends to follow. With that said, guys, we're going to go ahead and roll our breaking news, and we'll be back for the data. Stay tuned. All right, let's see. Got about 10 seconds to go. Got the stocks over here, dollar index, gold, and then some currencies here as well. Should be, let's see what we got. Okay. Dollar index not making too much of a move. 15 seconds after, let's see, maybe we're just getting a slight delay. There it is. Okay. Flash services PMI coming in stronger than expected, and manufacturing PMI coming in weaker than expected. That's a, did they revise this at all? Revised from 55.1. So that's a generally stronger PMI data for services. Not a huge reaction from the market. US 30 slightly higher off of this. DXY flat. NASDAQ not moving too much off of that. Gold briefly dipped, came right back. Let's go back over to our individual view. Let's have a look at our USD CHF. Would love to see this take out the lows so I could trail a stop. I'm actually going to trail a stop anyways. We're back down to the lows. I will update that inside of the members group, inside of Discord. So in fact, I'm going to write that down that I have to remember to do that. So ladies and gentlemen that are in the Discord, I will be updating that shortly after stream ends. Let's see, what else do we have? Okay, so here's NASDAQ. NASDAQ really tanking here today. Not looking good for my idea on that I've been sharing. S&P 500 also taking out the lows, it looks like. I actually want this now to really give me a bigger dip. I'd actually love to see that now. My idea to get long here, not working out. And I'd be fine if I get stopped out. The worst case scenario for me, I guess, well, not even worst case scenario, would be if we see something like this today, I'd probably buy it again. Like if we see a huge rejection, even if I get stopped out, I might try another attempt. But if we see this thing break out and it goes lower, I'm actually very open to that because then I could probably get an even better entry. So I'm watching NAS. Gold is doing well. So we got gold working for me. NAS working against me. S&P 500 taking out the lows here of the last few days, which, we'll see if that triggers more selling. The VIX is up 8% on the day. You got the Russell flat. Impressive. I mean, that the Russell's flat on the day. I mean, that's a strong case for the Russell there, I would say. You got silver up just 0.3%. Oil is slightly higher. Yields, overall down today. Take a look at the euro, pound, dollar yen. Look at dollar yen. My goodness. Is that more Bank of Japan playing around? We'll see. But that yen is showing some strength here this morning. Look at that, breaking through key support. I mean, that was a big support level going back all the way till May, where we saw several times buyers stepping in on this one and not quite catching a bounce there. That's crazy. I don't have any yen setups at this time, but that's a big move for the Japanese yen. And is that let's see, euro yen. Yeah, look at euro yen, completely took out all levels of support there. Pound yen. Yeah, that's a yen move today. My goodness. Really interesting there. Big swing to the downside on that one. Just do a quick check on our top setups here today. So this brings me back to kind of where do I want to be positioned? If we do see bigger pullbacks setting up, I'm going to take out the neutrals and I'm going to take out minor currency pairs because I don't personally trade them. So the Russell's not quite giving me a pullback, so I probably can go ahead and say that's not on the watch list. Gold, I'm already in that trade. Bitcoin, that might be one I'm watching. The euro, I don't like the chart. DAX, that's a maybe, right? So maybe. NASDAQ, I'm in that trade, but I'm probably going to get stopped out. So I'm going to say that's a maybe also. So NASDAQ might be an entry for me if I can find another setup. But today, price action is looking bearish. So I might not get a setup on that one today. TLT, I'm already in that trade. USD CAD, I got to check that. And the Dow Jones, got to check that. But I think the Dow is actually up today. So let's go through that just really quick. So the Dow Jones, look at that. Dow is actually holding its own today. This is kind of impressive. NASDAQ, if it takes out the lows, here's where I'm at with the NAS. For NAS, if you get a break through these lows, then we trigger down to this like 18,900, 19,000 level, that's probably going to be my next stab at a long. That, or if we get like a huge upwick today, then I would re-enter if I get stopped out. But I haven't been stopped out yet. It's possible we see a reversal, but I'm not liking price action one bit right now at these levels. So I might need to reset and set up again. We'll see. But I still like the NASDAQ to the long side. Overall, COT data looks pretty promising. Seasonality is decent. PMIs, not the most positive overall. But today's PMIs, the services PMIs came out pretty strong. So that might actually be slightly more positive for NASDAQ, in my opinion. I know the market might think, oh, that's going to turn into no rate cuts or less rate cuts, but services PMIs being strong to me are just a positive thing. Retail sales. So overall story, I mean, I do like the Dow, but it's not quite pulling back. Well, it's close. That 40,000 level, I might need to take a position if it gets there. So we'll see. Gold, like I said, I'm already in the trade, so just waiting for that one. I may trim my stop on this. Actually, I think I will do that. I'm going to probably just trim my stop a little bit. I'm writing that down for me to do that just after stream. I'm going to trim my trade, I think, a little bit. Not take position size off, but just take my stop loss and move it up, because now we've formed this low. I would not like to stay in the trade. If it breaks that level again, then, if we put in a lower high, like that's not looking promising. But if we, keep pushing, if we could take out the highs, that'd be great. We'll see. I like the story for gold. Like I said, I've said many times on the stream and channel, gold is looking promising. NASDAQ looking ugly. S&P looking ugly too. I mean, look at that, down 1.3 today. I'm kind of we'll see. I'm conflicted. I want the NASDAQ trade to reverse for my own P&L, but do I really? I actually would not mind if it goes lower. Then I feel like I could actually take a more confident buy if we get a more decent pullback. Anyways, I think we're going to bring in some heavy weapons for this to help us out. We got Chris Pulver standing by, so we'll bring in Chris Pulver in just a moment here for this. We're going to just run a quick break. Thanks some sponsors here that make this show possible, and then we'll be right back with Chris Pulver to talk more charts. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with Chris. Hey, Chris, how's it going, man?
What's up, Nick? How are your
Hey.
positions doing, dude?
Well, I'm mixed bag. I've got I think yours look great today. We'll talk about that in a second. But
Yep.
my NAS idea is looking silly, but my gold idea is looking okay, and my dollar Swiss idea is looking okay. So I'm kind of got a mixed reaction. But I wanted to get your thoughts on this move in the index level today.
Yeah.
Google and Tesla. Tesla poor earnings, Google strong earnings, but not quite enough, I guess. What are you looking at here today? Is this market looking like it wants to roll over further?
It certainly appears that way. I mean, I don't know. I mean, Google was fine on earnings. I mean, it beat earnings per share, beat revenue. Google missed on revenue. Actually, Google or Tesla. Did I say? I don't know. I said
Yeah.
Tesla.
We know what you meant. Tesla
Yeah,
missed.
Tesla missed on earnings per share, but beat on revenue.
Yep.
I mean, Tesla got a little big for its britches with that like 100% run since the lows here in April. So I could see this pullback. I mean, I'm actually watching a credit spread right now that's in profit. I did a in the money credit spread. So I have bear call spread at 230 by 232.50. So that's in profit. That's I collected like I want to say I collected like $1.75 out of 250. So I'm trying to generate. I have a 355 credit if I can get 50 cents or better. Let me see here. I guess I'll share my screen. That would be helpful. There we go. All right. So my Tesla trade, it's right here for August 2nd. But I'm probably going to close out the trade, maybe today or tomorrow. So my 355 is already trading for 290, which I mean, my max profit's going to be, that just jumped up. My max profit's going to be about $1. So if I have 355 max profit of $1, that means that if this hits 255 debit, I'm going to close it because I took the trade on both sides. So you can see here, this is my in the money bull put spread 270 by 270, 250. That's going to be a full loss. But this one, now that price is below it, as long as this stays where this is closing, out of the money, that's going to be what I want for full profit on that one for about $1.75. So I lose, $1, or I lose 75 cents here, gain $1.75 there, roughly $1 net profit on the contract. So not a bad play. Keep it cost effective. Netflix still hasn't moved a lot from last week. I'm curious what the catalyst really was for the sell-off. I mean, all I'm seeing right now is big tech earnings drag exchange funds lower, but it's like, okay, so did Google have like weak guidance moving forward? It's like, what would Google be saying? That's like, they're not consumer based. I mean, actually, I take that back. YouTube revenue was not hot for Google. That was like the one I looked at the report yesterday. It's like everything looked pretty solid to beat expectations, but somehow YouTube, which continues to be like I think YouTube is one of the best platforms for finding sessions like this and education for a ton of stuff. But I guess they're competing with, the likes of TikTok and other platforms. I mean, Instagram is your Facebook, Meta owns Instagram. But look, man, I think at the end of the day, this correction is needed. I'm actually happier this is happening now versus like October, November.
Yeah.
I mean, to me, this is like, okay, we just settle in. Like we've had a great first half of the year. You and I talked about it yesterday on the Trading Battle show. First half of the year, most of the time leads to higher second half of the year. Now, it may not be the same, but a pullback, a pause, some type of reality check is good. And you just got to wonder, like, how awful does it actually get? So if I take a look at my SPY, Basha says $1 profit. Well, on an option trade, $1 can be a lot of things. You have 10 contracts, it's $1,000, dude. So, all right. I'm looking at this. If we have this, let's say 1, 2, 3 move. I mean, I'd said this before. If we're going to see a continued sell-off, 7 to 12% is my SPY correction window, and NASDAQ would be 10 to 15. So they're the same trades technically. It's just the implied volatility of the NASDAQ is a little bit higher. So that kind of 20% increase in volatility typically yields a little bit more percentage wise. And that's what I see technically happening. So I'm not necessarily fighting this. I think my P&L just turned red on the day. Nope. I mean, I've been up, for the day in addition to, it was like up $9,000 like 20 minutes ago, and now it's flat. But I also have a bunch of hedges going. So, if we start to get really, really nasty to the downside, my VIX trade should be looking better. If we spike up to fresh highs on the VIX, which hopefully today's price action leads to that. But I have some E-mini futures hedging. I have some NQ or some NASDAQ E-mini futures hedging.
Wait, so Chris, you're just slightly negative or positive on the day. That's
Slightly.
really
Yep.
impressive on a day like
Yep.
this. That's awesome. Congrats on that. I've got I'm down on the day, but I'm down less than the S&P and the Nasdaq by a meaningful amount, just because again my gold trade is doing okay.
Yeah.
This is something I love, Chris, to talk about with gold. That maybe one of the biggest reasons that I like it is it's less correlated to the stock market. I feel like I
Sure.
can go over here and I can play gold and do my thing on gold. And it does matter what the stock market is doing, but not always. I mean, clearly look at today. The spread between gold's performance and the NASDAQ is clear that the correlation is not one-to-one by any means. There is probably some correlation, but it's very low. And the age-old concept of adding more uncorrelated bets to your trading is one of the greatest ways to reduce the beta in a portfolio, right? I mean, straight up. I
Absolutely.
mean, so
Yeah.
I love gold today. I love TLT today. TLT, I look at these days, Chris, this is something you have to think about as a trader that is not fun when you're getting started. Because when you're a new trader, your thought is, I'm not making money today. Why am I not making money? A
Right.
professional trader says, I'm losing less today than what I could be losing if I was just a passive investor. It's all about trading against the index or your benchmark, whatever that may be. If you're somebody who's a more conservative trader, maybe your benchmark is like, I just want to beat TLT. I just want to beat my passive hold. I don't know. Speak on that for a second. Just share with your thoughts, like on a day like today where you have really good performance, even though you might not be making a lot of money today. If you are, if anyone listening right now is not down by 1.3 or more percent today, you're actually having a good day. If you're anywhere above that, your day is decent.
Yeah, I was just looking. So I had to get some permissions from Tasty Trade for FXY. I was looking at a $70 call, which is out of the money on FXY. It was trading for $1.25, which is now trading for $3. That right there, and it bothers me because I mean, again, it doesn't matter because I didn't take the trade, but $3 to take, or $3 now minus the $1.25, $1.75, you're up. Oops. You'd be up 140% in that position in like the last 2 to 3 weeks of trading. As soon as this yen thing started to take off. So, to your point, non-correlated is good. My non-correlated trades, the one thing that's a bit surprising is we are seeing oil. I mean, oil and energy are typically good non-correlated assets as well. Oil showing a little sign of stability here around $77. But the scare of like slowdown globally and less demand in China, oil's been dropping. Copper's been getting smoked to the downside. Copper, I mean, they call it Dr. Copper like it's this PhD in economics, but this is not a good sign for the global economy if copper is just tanking from these highs. So anyway,
gold being up, you have to wonder too, is this something on the geopolitical front? I know, Chris, that yesterday I'm going to controverse myself because I went long the Nasdaq's not working out well. I got stopped out already.
Okay.
But I want to talk about this for just a second because, I talked about yesterday how I think that monetary policy is arguably more important in my view. Actually, not even argue. It's pretty much more important than who becomes the president. Yes, fiscal policy is important. The uncertainty, though, is really the part that I think the markets are caring about. I think I made this quote. I listened back to our battle yesterday. I listened back as narcissistic as it is. I listen to myself talk a lot because I try and improve how
Good point, Nick. Good point to yourself.
I listened back narcissistically to myself yesterday, and I was talking a little bit about this concept of like with the election, the market just doesn't like uncertainty. So if Kamala Harris swings back into, if it becomes a more 50-50 election in any way, the markets probably won't like that because they won't like the uncertainty. If it swings all the way to Kamala Harris or all the way to Trump, I feel like that's better for markets either way. Would you agree or do you disagree?
Well, I mean, look, we had Trump that felt like it was swinging to 70+%, and the first thing out of his mouth is, "I'm going to make Taiwan pay for their defense," and it's like, well,
the market's
probably
not
market doesn't love that. So I mean,
right.
I don't think Trump has any guarantee of the market being certain about stuff unless they're talking about cutting taxes and better, boosting the economy. Look, I think either administration is going to be still pushing fiscal stimulus. I really think
I
so.
agree. I agree.
Have you looked at this? I think I showed this in my trading room the other day. Debt clock. It's a debt clock countdown timer. Is this real time?
Yeah, US debt clock. You know what, Chris, I
Yeah.
actually fall asleep to this every night.
I never set an alarm to this because it's like it just puts me right to sleep, like counting sheep.
I just set alerts every time it gets higher. It sends me a text, so my phone is
So
just
I was gonna say, like, your phone's blowing up with notifications.
Yeah.
So this is the one spot that I thought was interesting. Interest on debt, right? $900 billion. And if you look at this for our largest budget items, military, Social Security, Medicare, Medicaid.
Interesting.
This is also a reason, like, Boris asked this question yesterday about, the Fed cutting and why. I mean, I think that it's not only a consumer cut, but I think this is the Fed also taking off the pressure of financing debt at just a ridiculous level. That look, the Fed doesn't want to stay at 5.25%, 5.5%. I listened to a lot of podcasts and read a lot of stuff on how long could the Fed sustain, servicing debt at 5+%, and it worked out to be about a year. I mean, once we got rates up, I mean, since the end of 2020 to 2023, that 5.25%, 5.5%, once we got there, we've gone about a year and a half of servicing that debt. And, we're doing bond auctions every 2 to 4 weeks. I just think that, I mean, think about the difference in, we're talking about like buying a house at, instead of 6%, let's go down to 5%. Makes a big difference for a 30-year mortgage. You talk about, debt on trillions and trillions of dollars. Saving 1%, saving 50 basis points, 100 basis points, or 150 basis points does change a lot. But honestly, it's like nothing. It doesn't matter. This is all funny money at this point. When you talk about a trillion seconds is 31,000 years ago, nobody can fathom how big a trillion is. So it's just all numbers, and it's like everything gets tossed around. We put a budget together, put a surplus package together, $500 billion.
Yeah.
That's not that far away from a trillion, but it's just like these numbers are astronomical. And anyway, that's just
the thing is
crazy.
You're talking about, house affordability. I know we discussed that yesterday. You're talking about, but look at this too. I think I found maybe a little bit of insight into what is causing this pretty aggressive sell-off here today. And I'm not going to say it's all UPS, but UPS is one point here. UPS is a great indicator of the economy, generally speaking. Not perfect by any means, but if you see, performance of huge transportation businesses. You mentioned earlier, what was the thing you mentioned? There was something consumer based. I forgot what symbol it was, but you're just discussing one. Here's another one for a UPS, and maybe the biggest fall in sectors today being XLY is telling us something too. This is the consumer discretionary sector ETF. XLY, you guys can pull it up on your own screen if you want. XLY, this has companies like Tesla, right, which are dragging this down. It has Amazon, it has Nike. Think of your companies that sell something that is optional spending, right? People don't have to go buy a Tesla. People don't have to go buy new Nikes. People don't have to, but people do have to go buy toilet paper. They do have to. Those are staples. These are discretionary consumer items. And today, them being down 3% could be giving us a bit of a picture in terms of what the economy outlook is looking like. It's looking like slowing is a fair consensus. Not only that, SMH, the semiconductors, I think of this as like the ultimate proxy in today's world of how the economy is looking. The semiconductors business model is all about servicing technology, which is the biggest component of our, global system. Are they demanding chips like crazy? Are their earnings wild, or are they slowing? So SMH being down, XLY today being down, maybe suggests that we, settle into a little bit of a cooling in the economy. Not only that, PMIs out of Europe were weak today, and there you go, gold is up. So seems to me like a bit of the consumer's hurting today.
Yeah, and I think that's what I think needs the most help is if we're going to see any type of broadening, any type of healthy bull market, the consumer is going to need some help. Debt refinancing, restructuring, that's going to need some help. I would not be surprised if a year from now, year and a half from now, we're seeing, 1 to 1.5% cuts across the board. Nick, I read something really interesting. I mentioned this morning in my trading room. The Turkish lira, the dollar Turkish lira, USD TRY.
Chris, I also have an alert system every time this one gets to a new high.
Oh yeah. So for the last 2 years, this has been going up every single day. So it's funny. Like I was watching this back in 2021 when we had a flash crash move and a correction, because I thought, okay, this was a broken currency pair here. When this thing just ripped up here for, this is no exaggeration, about 100,000 pips, and then pulled back about 80,000 pips. That dip in December 2021 has then seen 200,000 pips to the upside. Now, what I'm reading about the Turkish lira is that hedge funds are starting to pile into the Turkish lira for a carry trade because it's 50%
offering so
to
much.
5%.
Well, I've been short for like 3 years on this one. I'm just kidding. No, but no, that's an interesting point. And again, that flash crash that you mentioned was so violent. I mean, that one's tough for me, Chris, because I'm just
it's going to be nuts. Like I was talking about, I'm like, look, you can sit there and be like, hey, guess what? We're getting 45% swap, but you're down 200,000 pips. It's not going to matter. And I don't know how this actually turns to permanently go down, unless it's like, again, dollar gets weaker. But that's what's weird is like dollar gets weaker. Is that a risk on environment, or is dollar getting weaker because the entire landscape has changed where now the dollar's not the same asset that it was, and maybe it's better for gold, maybe it's better for Bitcoin perhaps. But
maybe
not a trade I'm going to take.
Follow-up question on that, Chris, is we could kind of walk over to the yen for a second, talk about this one, because this is maybe the Turkish lira not leveraged so much, like it's kind of a similar concept. It's like, people buy the dollar yen, it's a positive risk to, or positive carry trade. Also, thank you to Chandler. He just turned off my overhead light because it just popped on. So thank you. But this one, buying the dollar against the Japanese yen, shorting yen, it's been a positive carry. You get paid to hold this one long. But that's almost like, another trap that sometimes people get themselves into, Chris, is, oh, this stock offers a 9% dividend, but the company is losing tons of money and they're paying everything they can to keep that dividend high until they have to cut it. So is this unwind conversation that we've had in the past, is it starting? I mean, the yen has been so devastated, but it's still a powerful economy in the world. Hasn't had very impressive growth. Their population growth is a big negative for me. But is it possible that we're starting to see some reversal in the yen? I don't know. I mean, you're positioned for it, right?
Let's talk about this. So, I sat there and I was like, oh, I'm all bummed because I didn't take my $70, out of the money call that's up 145%. But I do own FXY, which means I'm 100 delta on that. So if it goes up, it makes money. I'm also in some credit spreads on Japanese yen futures, and I'm in on the I've also protected myself to the FXY downside in case we go like lower and the Japanese yen gets weaker. Now, to this chart, this little glimpse at unraveling is certainly different than what the tone has been since that correction we had late 2022 into 2023. But for me on this chart in the dollar yen, does this actually show you any technical signs of the trade is over, the carry trade is done? Because it really doesn't. If you look at this chart right here, I know that we had some intervention. I know that we've melted down, from 160 and 162 highs or so down to 153. I mean, we've had about 700 to 1,000 pip corrections on some of these yen crosses, which is great. For anyone that's been, and I hope nobody's just stuck holding and they're like, oh, finally the yen's cooperating. That's a terrible position to be in. But to my point, dollar yen doesn't really look like the carry trade is officially unraveling until we're talking about the dollar yen out here in the open. So I know this could still correct, but would anybody be surprised? Anybody that trades the yen crosses, would you be surprised to see this thing finally correct, find support, and then go right back up? Would anybody be surprised? I wouldn't. Unless things get way worse and this is truly an unwinding, I wouldn't be surprised to have this level come right back down to this area, test trendline support, got strong support here, strong support here, strong support here. Even if this is the dead cat bounce, Nick, even if we go up halfway and then break, it's still an opportunity for a short-term trader to look at the technicals, align your time frames, and find an opportunity to trade this thing. So right now,
And here's
sure.
the thing, Chris, I want to add one thought to your
Yeah.
concept here with the yen, which is what a lot of people, I made the point just a moment ago, and I want to correct what I said a little bit. I said, the trouble that I have with the yen is the slow growth and the population, decline, all that. But it's not about the Japanese economy. It's about, if you have, to your point about a true unwind in the carry trade, what does that entail? That means global growth is really bad, and Japan's growth will look comparatively better. That's the thing, is even if Japan's growth is not very impressive, it may not crash as hard as other places if we see a true global recession or global slowdown, which today's data, the consumer in the US, we're seeing at least increased arguments for cooling in the global economy. PMIs out of Europe. I mean, we had some evidence today. That's why the yen, I think, is grabbing a little bit of a foothold here in the global market. You see the yen strong today, and if you see a real carry trade unwind, I just want to reiterate that it is not about, oh, the yen's economy is so stellar. It's that the yen's economy, or the Japanese economy, may not be as devastated by a global recession as other places. They're an exporting economy. So yes, they would take hits on that, but they would greatly outperform, likely, other places that are much more subject to the direction of the wind, if you will, in terms of the global flow. So that, I think, that's the tail end risk of the yen. Is that a fair summary, I guess?
Yeah, that's fair. And I think we've got to watch the Nikkei, because after a 34-year drawdown, it comes back to all-time highs. I'm not going to say that it looks perfect, because with the yen getting stronger, the Nikkei has been dropping, and we've been kind of matching that in the US. I mean, if you look at this recent drop, we have fallen about 7.5% on the Nikkei in the last couple of weeks. Now, to me, same thing. Look left on the chart. If this structure gets broken, if this low, especially from April, May, gets broken, is the Nikkei, after this incredible, 15-year comeback and 34-year drawdown that's finally broken, do we actually put in a top on the Nikkei and we come back into this area? I mean, if that's the case, there's more unraveling for the yen. Look, we hit tops in the DAX, we hit tops in the FTSE, we hit tops in the Hang Seng, we hit tops in the Nikkei, we hit tops in the US markets, right? The SPY, the Qs, the Dow. Russell hasn't hit tops yet. Doesn't mean that it can. I mean, if everything's down, I doubt the Russell's going to be the one index that's like, we're untouchable. Well, this has been the catch-up trade. It's like
Right.
the Russell is just as vulnerable to
The
everything else.
catch-up trade happens in a perfect, Goldilocks, not
Exactly.
in a fallout.
The Russell is going to be like,
Well,
okay, it sucks
actually,
less,
maybe,
but
I don't
nah.
know. One question, I guess, to challenge both of us, Chris, could it be possible that the catch-up trade is actually a catch-down trade? That would be kind of a scary scenario, where you have, maybe the index pump up that has been on the SPY and NASDAQ, the top heavy stuff getting the most allocation. If that unwinds, could that catch down to the Russell, which is, I don't know, just throwing it out there as an idea. I kind of see small caps getting punished, but if you see a Trump presidency, which is more anti kind of, it's strong on imports kind of policy, that could be stronger for domestic companies, which the Russell is a little bit more domestic based. And but I don't know. It's kind of a hard, I personally don't think that this is the case. I'm just trying to throw out some ideas.
Sure. Well, I mean, could we erode all the gains from this year? That'd be a really tough, like, is that a terrible July? I mean, where are we at right now? If I look at let's look at SPX, or I'll just go ES since this chart's a little bit cleaner. Let's go ES monthly. I mean, right now we are setting up for what started out to be like a celebratory first half of the year. I mean, in the big picture, this really isn't anything that's terribly damaging here, Nick. But I would say that with this look right now, only we have the 26th on Friday. We end the month next Wednesday with Fed on the 31st. I mean, as it stands right now, this would be a perfect little evening star situation if we have a red candle coming into August. Now, what is August? Jackson Holes towards the end of the month, and it's all earnings. There's really not much happening. Yes, they're going to have another round of CPI data and PPI data and inflation and PCE, but I mean, what are we going to see? Well, if we're seeing the market slowing down, we're probably going to see inflation numbers going down too, because the consumer is cutting back. That's what all this guidance has been. Look, Nike is down, UPS is down.
Inflation is likely to cool, Chris, but here's the big
Yep.
question. Google's earnings are a scary example. That might be what is also contributing to an aggressive sell on big tech today. Is think about this. Google had pretty good earnings across the board. Yes, YouTube revenue wasn't particularly impressive, but it was still 14% year over year growth. I mean, that's double digits for a ginormous company. I heard somebody breaking it down. If YouTube was its own company in the S&P 500, I believe it would be valued somewhere. I think the guess, and I don't know, I'm making something up here, but I know that they had sent somewhere in the $400 billion with a B would be the value of YouTube by itself. It's a huge component. To grow at double digits is really impressive still.
Yeah.
I mean, the point is though, they beat on the top and bottom line and the stock still dropped 5%. If that sets up earnings, if that's the tone for earnings, that's a little bit scary, because if you have to beat, if they beat on the top and bottom and still get punished 5%, I would have guessed going into that. If you gave me those numbers, I would have said Google's probably going to be down 1% or 0.5%, but then down 5% today. I mean, if that's the tone for earnings, that's one thing to really pay attention to. With your point about market maybe putting in a bit of a doji looking candle there, a pin bar looking candle on a monthly chart.
Yeah, and I mean, why is Google down aggressively? I mean, it's the same as the SPY. I mean, it's similar to what we had last week. I mean, last week's sell-off, this is an easy way to see it. I mean, this snuck in with and this is what makes 9:30 to 4 o'clock trading difficult sometimes. If you're not in the futures market, this is always a wonder. Like, how did that happen? How did that happen? It's like, yeah, we had Google and Tesla. Okay, so we have two big stocks, a bunch of, but like, really, you're gonna tank this thing by over 0.5% and gap lower. And the pressure obviously last week was, this was the first time that once we put in this gap, this wasn't a buy the rip. This thing actually took out the previous week's low, and we're doing the same thing. Like, this gap right here took out the previous week's low. So now my probabilities are shifting where even if this thing wants to come up by Thursday, Friday, we're probably not taking out this week's high. We took out the low. We're likely not taking out this high. We're likely not taking out this high either. So, I mean, I would be positioning for this to still tilt a little bit more to the downside. And I just want to see, like, does the VIX respond to this? One thing I'm watching again. So VIX is back up towards 1646. We had highs last week at 1720. I've got highs set at 18, 19, $20. I mean, if we look at the VIX here, I mean, if the VIX is going to get scary, we're going to be above 30. If we're just talking about a normal VIX cycle, going from like 11 to 23, 11 to 24 isn't out of the question. And we're traders have to realize that at these, high multiples, we have like forward earnings at 24, 25, 26 on the S&P. Historical average is like 18, like 17 to 18. So we have had lofty valuations. We've had lofty expectations. And look, Google delivering is fine, but if things are underperforming or we're missing on, I would say revenue is probably the big miss, because EPS can be manipulated a little bit, but earnings, revenue misses are not a good thing, because you can't really fabricate revenue.
That's money coming in the door, before they play around with it. Yeah, no, that's a really good point. And we'll have to see what happens with earnings season, but the stakes are high, and I do think that if you ask me about what's more important, I'm going to say probably the big tech earnings are maybe more important or maybe equal to Jackson Hole, because I think that the market is pretty cozy with the idea, like, okay, we're going to see a rate cut in the end of the year, or maybe two, possibly two, but the question is growth sliding out the back door at the same time? I think that I mentioned that yesterday on the dual mandate front from the Fed. The concept of they try and keep price stable or inflation under control, at the same time they try to keep maximum jobs and growth okay. The question is growth. I think that has been my thesis. Is now it's all about, do we hold on to the growth story between now and the time that the market starts seeing rate cuts? That's the question for me.
when does Apple have earnings? Because that's what actually saved the market earlier this year after the April decline, right? As soon as Apple announced, hey, we like AI, here's what we're going to do about it, the market's like, oh my gosh, big tech is in AI now, not just
Yeah.
Nvidia, which by the way is also pretty stable, hanging in there at like 119. I mean, if we're going to have a sell-off, man, I'd really like Nvidia to get down to fresh lows, 115, 110. I say that because I have a trade that's running that way, so I'm hoping it leads to the downside.
Yeah.
But
We got
Apple,
August
we had
1st, Thursday.
what's that?
It's a Thursday,
Ah,
August 1st for Apple
oh,
and Amazon.
interesting. Okay. Okay,
Yeah.
so I was saying that because once we had this kind of April bottom, Apple was one of the bigger catalysts for getting the market to shrug off
Yep.
the inflation concern, shrug off the downward direction and the trajectory that was happening all through April. And
Mhm.
so I think you're right. I mean, having mega caps, large cap tech, at least stabilize it probably like decreases the panic. It probably like
Yeah.
just puts a little bit of ease in the market. Like, okay, look, we've still got the top 10 stocks. We still have the top 5 or the top 7 or the top 4, and that's enough. But it's really not enough. I mean, but
Sure.
I just wonder, how look, we're talking about a sell-off here that's lasted a whopping 2 weeks, and to the percentage wise, it's not that far down. I mean,
No, you're talking about
we're talking about 3+%, maybe.
yeah,
Like,
3% on the S&P, 3.5%. I mean, that is,
yeah,
and Chris, you look at historical periods. Frank and I were talking about this. Like, you look at moves in the S&P 500. There's a lot of like 5-10% dips. Now,
yeah,
when things are really bullish, and that's where I'm still trying here with some entries, pretty tight stops, because you do see these more brief kind of mini pullbacks, 2% pullbacks. We've seen that a lot this year. But if that story is no longer the case, like if we're starting to break down from these, you get 2% corrections and that's it, or pullbacks, and then the market rips again. If we're starting to break that pattern, we could be looking at more like in April, which April was a pullback of, I believe it was like 6%. Yeah, 6.5% peak to trough. So, I think we've broken this pullback. Feels like it's broken the 2% kind of holy grail pullbacks, and is now starting to look more like maybe a 5 to 6% pullback, which, just to mark up 5 and 6%, 5% is a move down to 5,400 on the SPX, and 6% is down to 5,330. So, and then, then you get into like the bigger territory of like 8% brings us back way back to, this key level. I think you talked about that yesterday on Trading Battle.
Yep.
And then a real pull, like a real sell-off, like a real jump would be down to like 12.5% back down to April lows.
Yep.
Is it possible that it corrects and completely erases 2024 gains? Anything is possible, but I personally think that's very unlikely. Just, it's been but it could happen. You never know.
Yeah, I think that if we do come down to those April lows, that's a pretty ominous level, because that to me is like, that's really testing, that's taking away a lot of gains for a lot of this like fluffy, melt up, and getting back to April lows would be like, okay, bulls, you got your work cut out for you to take out those highs again, and bears, I would say definitely get the upper hand, and we're looking at like head and shoulders pattern, topping pattern that everybody can see.
Mhm.
And that doesn't always mean it's the right pattern, but man, it's like a lot of times these patterns are self-fulfilling.
Yeah.
So if we came down in this, I mean, it would look like just like you had on the chart. I mean, if we were to come down and just violently test that level, look, there's probably going to be an aggressive bounce there, but I would be super, super short term on that type of bounce, because if that happens, or we start playing with that neckline and making it really tricky, man, and if you look at this on the higher time frame, like take the COVID low, for example, okay, would that really do any type of crazy damage? I mean, to the longer term market, if we went from high, low, lower, high, lower, low, and we came back to this level or this level, I mean, I suppose this channel breaking gets us into some interesting, like uncharted territory. But man, if we topped out here from this low to this high and this low to this high, it's like, I guess it would be a necessary correction similar to what 2022 was. Maybe that's it. If we correct it, and then maybe the longer term is still up. How does it figure it out? How does it shrug it off? I don't know. It's not going to be ugly, or I'm sorry, it's not going to be fun. It's not going to be pretty. Like 2022 for everybody, unless you're in currency pairs, 2022 was a challenging year. The only reason I made money in 2022 was because I was hedging in currencies and I was long inflation and energy the first half of the year. Other than that, it was garbage, And so I don't know what this looks like when your large cap tech might be dragging everything down. But we've said this for a while, Nick. It's like the house of cards. You can't have this super narrow, high concentrated market that keeps going all-time highs, all-time highs, all-time highs. And
Yeah.
everyone's excited about that. But
Yeah.
man, at the end of the day, your upside is so much less than the potential downside correction.
Yeah. And here's the thing, Chris, is we're talking about the consumer crack is actually, they thought the consumer was going to crack so long ago. Like that's what economists are. They're like, oh, inflation's going to ebb out the consumer. We're going to see a recession. It's taken so long, but maybe we are finally starting to see that actually, become a real deal. If you take a look at the consumer, if we go from January here, I'm just looking at a monthly chart on XLY. The XLY is up 3% on the year. That's the consumer in a nutshell. Is what I like to look at as like a benchmark for how's the consumer feeling. Benchmark for the consumer says not very hot. I mean, that's a concerning, is a growing concern that I think as long as this chart doesn't, considerably do much better than this going forward, I get worried about the broader stock market because the consumer is a huge driver of the performance of most businesses. And a lot of this stuff is B2B, at the top level there, the big ones are selling to each other. They're selling to other businesses, but the consumer facing businesses are hurting. As you mentioned, you came on the show, we talked about, Starbucks got killed. Look at Nike. You've got a lot of consumer facing businesses and reflective in this sector ETF that we're discussing right now, showing some cooling overall.
I mean, Costco put in a recent top. I mean, Chipotle, Chipotle was like the stock that, who would have known that a little fast food Mexican restaurant burrito place that is owned by it. Didn't McDonald's have something to do with Chipotle? Am I making that up?
I'm not sure. I haven't followed it. I'm not.
Somebody fact check me on that.
I don't, Chris, the social media has like erupted over Chipotle. They make fun of the fact that they give you a lot less protein now when you go to Chipotle. I don't know if you've followed any of that drama, but I listened to a whole thing, a guy discussing Chipotle. He was pointing out that, they don't want to cut the spending on employees working at Chipotle, and they don't want to raise prices on their consumers. So their creative middle ground was to cut the amount of protein that each bowl has in it so that they're spending less on chicken and steak and all that. So anyways, that's not been good, but then also
shrinkflation.
Yeah. Shrinkflation, truly. So, if it's not showing up in the price, or it's not showing up in the employee paychecks, it's probably showing up in the bowl.
Yeah. So McDonald's did have something to do with Chipotle.
Okay.
A guy who knows a guy, but no, it took a vested interest back in 1998. McDonald's did purchase an investment in the then brand new business that was Chipotle. So there was a hand in that. Fast forward, the relationship between the two chains dissolved. McDonald's sold its shares. Chipotle was on its own, but that wasn't the problem. The chain's momentum was full steam ahead. Chipotle more than doubled its locations in the next 5 years, and today has more than 2,000 stores nationwide. The Golden Arches has clearly let go of the Golden Goose. So they had a hand in it, but they let it go. And it says, I'm just reading here. Massive business decisions like that were never simple, but potential reasons. So I just wondered, why did McDonald's let it go? I don't know. Probably because we don't want another chain, doing better than us, and who knows.
Sure.
By the way, random story. I was just like, I need to grab a coffee. Stopped at McDonald's. I swear this McDonald's had maybe 3 people working in it.
Wow.
Going into the lobby, you got to order on the giant screen for the app, getting a coffee. I'm like, it's like there's nobody working at this place. I'm like, good for margins.
And do you like using the machine, or are you a guy that doesn't like using the machine?
I mean, I can use the machine. I'm just like, it's just, I mean, when you stand at the counter to order and nobody helps you, I'm just like, oh, they don't care. They just want you to use your app or want you to use the machine that's in the lobby. I'm like, fair enough. I mean, I'm not a boomer, right? I mean, I get it. I'll use the app, but anyways, I just want a coffee. It's $2. I want a coffee. I want to go. But it was crazy. I'm just like, and I know this has been since COVID onward, but I think companies, bottom line oriented, find a way to do more with less. And I mean,
Yeah.
To the fast food
No,
workers in California, I hope you guys make $50 an hour, even though that's going to be a horrible inflation point at some point.
yeah, that's
So anyway, man, it was just a funny situation where it's like things have changed. I can't say it feels like it changed for the better. We're sitting here talking about these first world problems with the markets at all time highs and how do we trade them? And oh my gosh, we're down or ups. But at the end of the day, what we're trying to do is trade. And there's always stuff to talk about. There's always stuff to trade. There's always opportunity. I will say that if you're a diversified trader, you're probably going to have to incorporate, assets that you may not trade right now. I mean, Nick, you trade stocks, you dabble with some options. Do you sprinkle in Forex a lot? Are you big on Forex? You mostly like gold and
I trade
stocks?
FX, but it's like my, your point about 2022 being a year. 2022 was not a good year for me, but it was cushioned a little bit by some FX trading that I did. So I do trade FX, but I generally trade mostly commodities and indices. And yeah, that's mostly what I trade. I know, Chris, you're like the most spread out trader that I know. You trade a little bit of everything, but and I say that in a positive way because you're very fundamentals focused. You're very, it doesn't matter what specific symbol you're trading. I like that you trade, your principles, and then you find areas of the markets. I'm similar in a way. I have a little bit narrower scope, but I think a lot of audience members would say that both of us are very broad in what we look at.
Sure. I mean, I look at it like I'm happy to trade all these asset classes, not because I want to track hundreds of things, but simply because if the more I can broaden out, the more kind of non-correlated things are.
Yes.
And so for me, it's like times like this where, let me check my P&L in the day. I'm actually up $4,000 today. Given the market is down, I'm doing okay. So I mean, I've got positions that are protecting me. And again, like what are the hedges? I'm long the VIX. I've got some ratio spreads. I've got some broken wing butterflies. I've got all these option strategies where, I've got profit traps out there where if it hits my, technical levels, it actually pays like 8-1 or 9-1 or 10-1. Earnings season, I'm trying to keep the cost basis very low so it's not expensive if I get dinged on some earnings, because I could see this happening. If this is rolling over a little bit for more of a correction and a slowdown, earnings aside, that's why I was wondering when is Apple earnings, because if we have Apple, Microsoft, Nvidia, those are still your top three. They are the ones that might stabilize this little meltdown.
We saw Nvidia
so
do
great.
that a couple times. We've seen Apple do that. Yeah, it's a good point. Just keeping an eye on when those move. Also, Chris, I'm going to have to hand it off to you here to take over for a little bit. I got to jump off for a podcast. But before I do, let me just mention, if you guys have enjoyed the commentary from Chris, he's a regular contributor to the A1 Trading Show. This is a group effort that we do to try and make a great hub for traders. We're doing this every single day, putting in the hours with guests from all over the world, trying to make this a better show. If you guys enjoyed it, hit the thumbs up, subscribe, and also you guys can find Chris Pulver on his own social media. Don't go anywhere though, because Chris is going to take over for a little bit and keep the show rolling on. He's the host now, so you guys got Chris, and Chris, we'll see you on the next one.
All right, thanks, Nick.
See ya.
All right, bye. All right, so I'm just checking on some 8-cap positions here from yesterday. So my balance is sitting around 10,500. I've got a couple more dollars I'm looking to gain here. So if my pound yen short continues, that would be, I'm up about $700. I need that to get up to my profit targets around $1,250 to $1,300. If that fills, great. And honestly, if that does fill, I could wash the Aussie and New Zealand yen trades, maybe have a minor loss there. But I think if based on our trading battle that we did yesterday, which was a great session, Boris Schlossberg hosted, Nick and I battled it out. It's been a lot of fun. Those sessions are always great. So shout out to the trading battle team. And we always have a lot of fun working with them. And it's good content, bringing some great traders together, just like A1 Trading does with all the guests that they bring on for the show. So, show some love out there, like and subscribe, all that good stuff. All of you, all of you know what to do with YouTube. If you come into a channel and you like the content, if you're coming to a channel every day, the very least you could do is just hit that thumbs up button for everybody that you support. If you like the channel, come in, just click the thumbs up button before you get going, and off we go. So anyway, trading battle stuff's going on. I'm up to about $10,500. I've had some washes. I took a Bitcoin Ethereum trade. I was positive on Ethereum, negative on Bitcoin, but the win was larger, like $700 to the upside and then $100 to the downside. My yen pairs, the velocity of the yen pairs isn't quite the same. So I mean, my Aussie yen is actually down more than my New Zealand yen, unfortunately. and I might run the risk of getting that stopped out, but it is what it is. So euro yen, pound yen, same thing. I'm actually at a wash point right now. I could just close this down and make it a break even, but I'm trying to let the pound yen get the upper hand. If I cross this over $1,000, I'll probably take the profit. All right, so we're still down here, 54.73 on the SPX. I did notice that the volatility index is going higher. I'll take some requests. Yep, so I see someone's asking about Ripple. So our XRP, dollar Swiss from Zen, pound dollar. Okay, yep, we'll talk about that. So 1640 on the VIX. I'm going to go ahead and move this down to see if we break some recent highs. Just showing me that if the pressure remains to the downside, so recent highs on the VIX, right there. I would love to see the VIX get up into the 20s. If that's the case, hopefully my VIX that I have out to August, and I want to say it's out a decent period, August 21st. So it's out enough. The monthly expirations right now, that is trading for 545. I'm all in for it for about a 450 trade. I mean, it's not paying out intrinsically like I would like it to, but if we creep up another $3 to $4, that should be, right now I'm trading this at a 99 delta, so I should be getting that essentially tick for tick. So if we get up another, let's say $3.50 to get up near $20, I'm hoping that this is going to be trading for close to $9. If it is, I'll take the profit. That'll be 100% position on the VIX hedge, and that's fine by me. And also on the other one, the $20 VIX that I have is out of the money. I paid very little for that, but hopefully I can turn that into a couple $1,000 as well. Okay, so let's go to some symbols. So each and every day that I'm live, I kind of like to do my top down analysis, and so I just called Pulver report. SPY on top, then the Qs. I've got some futures sprinkled in there with ES and NQ, and then the DIA, IWM, the VIX, the dollar, oil, gold, silver, Bitcoin, some ETFs on Bitcoin, Ethereum, copper, foreign markets. So you got Japan's Nikkei, you got the German DAX, you got the FTSE from the UK, China's Hang Seng, and then your Mag 7. So that's a good way to start. I take currency pairs as well if you want requests. I typically do A to Z. So you're starting with Aussie CAD, ending with dollar yen. I haven't traded exotics in a long time. I used to trade dollar peso. I used to trade dollar South African rand. I used to trade the Russian ruble, for crying out loud. I've dabbled in a lot of instruments over my career. That's why I was bringing up the Turkish lira. I've been watching that for 3 years. I just know that and rarely is a currency pair broken in the Forex market. But fundamentally, if you're trading, anything with Brazil or Argentina or Turkey, there's some crazy stuff happening out there that these hyperinflation countries are just getting smashed, and that plays into, anybody has done some research on the milkshake theory. That's essentially what happens, where the dollar has these risk on or risk off things, and it just sucks up all the liquidity and goes all back into the dollar, which is why people hate it so much. But is it going to change and unravel and be done? I don't know. That's like moving the Titanic. But as you know, the Titanic also crashed. So, by the way, trivia question. Where was, I don't know the answer to this, so I'm asking, where was the Titanic, where was it harbored? When it took off, where was it from? Was it in Canada? Does anybody know this? Random trivia, feel free to look it up, type in the chat. But anyway, all right, let's go down from some top down. So we're down in the day. I've got 1.46% down in the SPY. 1.47 on the SPX. We're at 54.74. That's also coming off of a pretty large gap to start off trading. So I did look at a trade this morning on the SPX. I collected $3.10 credit on that trade. It is right here. Currently, it's still in between my levels, so it's trading around the same price. And we have a little bit of volatility to the downside. I started this out around a 14 delta on the put side. It's now a 22 delta. So that put side being threatened a little bit today is causing this to take a little bit longer. It's only 1042, but typically if price is very stable and very sideways, this decays very quickly. So what I'm looking for is, I took the trade for 310. If this decays down to like 260, 250 or lower, then that'll be my profit target on the day. So I've got a little trade there on the SPX. Let's go to the NASDAQ. So NDX is down big. Just look, this is like a repeat of last week. This was a big gap lower. This is a big gap lower. This is putting continued pressure on the NASDAQ. As Nick showed in his charts, and I talked about this, if you're looking at levels, right? If anyone's out there like that's super excited about, so it's in England. I swear it left England. All right, we're gonna have an argument about the Titanic. if you look at the correction levels, if you are just so excited to buy the dip, I'm still thinking that a 7 to 10 or 7 to 12% pullback on the S&P is doable. I think that a 10 to 15% pullback on the NASDAQ is doable. Would I dabble with the 10% level on the NASDAQ and buy in? Probably. Would I do it with just owning shares? Probably not. I'd probably dabble with credit spreads. I'd probably dabble with testing waters with defined risk. If I'm wrong, I'm wrong. If I'm right, it's income and I can stagger out. So I'm watching all these levels very closely. But similar to what we did last week, I mean, this gap, by the way, such a big gap. On the next trading day, we went down and just kind of stayed there. It seems very similar to what that behavior was last week and what we're doing today. So we gap, we go a little bit lower, and if we just stay here on the day, is tomorrow more to the downside? Maybe. Is tomorrow? I don't know. If I knew, I'd be 100% invested in what direction I knew. Nobody does, right? But I just think that this is a bit of an unraveling. The market is it seems to be turning over, and we're just in the beginning of earnings season. We truly are. I mean, this week with Google and Tesla, that's the tip. I mean, we have so many other big companies reporting earnings this week. Some of the notables that I pointed out on Sunday and Monday. Also, another thing I'm going to be watching. We talked about this yesterday on the trading battle. Would be watching your junk bonds, watching your credit spreads. I mean, all these things. If credit spreads are widening, so let's say you have your triple B credit spreads versus your, let's see here. If you want to do triple B rated credit spreads versus US Treasuries, so you can look at the difference between like LQD and TLT. If those are widening, okay, meaning there's like, one is starting to open up and get a lot more divergence, that's not a good sign. So widening credit spreads means potential scare of a credit event. Every time we've seen major credit events, 2020, 2008, 2001, it's a scary time because now we have a liquidity crisis. Now we have a credit crisis. That's when the Fed has historically stepped in and put in a backstop. And, if you played the game the last 20 some years, 30 some years, anytime there's been a Fed backstop, it typically works out pretty well. The uncertainty would be like, if the Fed steps in again, does it mean backstop? Well, coming off of all-time highs, I don't think the Fed's going to necessarily step in and backstop at a 5 to 10% correction. That's just me. Could happen, but I doubt it. So it's again, moving forward. There's a lot of things we've got to dissect and digest. So anyway, let me not get distracted here. Let's just keep going. So I see similar behavior on the NASDAQ today with that gap lower and just pressure to the downside as we saw last week. The Dow also has already turned red. So that big pop to the upside. So we had 2 weeks of Dow strength. We hit all-time highs, and we're quickly eroding it, giving it back. The Dow year to date, I want to say, is possibly still in the single digits. So to start out the year's trading, here's January. Let me go into the Dow. So right at the beginning of the year, right in here with a little pullback. And I'm going to miss by just a couple of dollars here on the ETF, but we are roughly sitting up around 6% for the year. Okay. At one point, we were stretching towards double digits, close to 10% or just over 10%. And then we gave some of that back. So we're still single digits on the Dow, and the IWM, it is still, I mean, I got to give it credit for the IWM to be down 0.2% versus 1.5 versus 2.3. Thankfully, the IWM is holding on to some resiliency. And why would that be the case? Well, I mean, there could be some interesting flows coming in with the IWM having this like small cap save, where if we're going to start seeing interest rates cut, underperforming small cap may be in a position where if they need cash and access to cash, they can get it cheaper. They have a little bit more cash runway and debt runway to borrow. Again, and this is 25 basis points we're talking about, but it's the future that the market's pricing in. Okay, the markets are typically 6 to 8 months forward thinking. So right now, if we're looking out 6 to 8 months, the market's already looking at pricing in, 2, 3, 4 rate cuts, and that essentially is going to be like a 1% difference. That changes a lot of things for mortgages. Changes a lot of things for that 5 to 30 year financing window. That changes a lot of things for business, in a good way. I mean, if you need access to credit, hopefully it's there. But like I said, you go back to some type of liquidity crunch or credit crisis, that's not a good thing. Okay. But IWM hanging in there resiliently today, just down 0.2%. Dow's down a little bit more, but still not as bad, 0.7. Qs are down the most, 2.5, 2.4. S&P at 1.5. We're still going lower. Good. I was going to look. This is probably. I'm just checking this one. I'm looking at $1,000+ dollars on the pound yen. If I get it, I'm happy with that. All right. Let's go VIX. VIX at 1651, watching to see if we hit recent highs at 17 and change. I would like to see the VIX around 20. If I get it, I'm probably protect some of those hedges. Dollar index. I swear the dollar index is. We'll get to gold. Don't worry. I'm going to do the whole thing plus some currency pairs. And if I need to be off by 11 or shortly after 11, let me know. I'll plan on wrapping up here around 11 o'clock or 11:15. Doesn't matter. But I think we might have a guest standing by. So dollar index. I think that a bigger move on the dollar would be a break below 103.90. Okay. Now, does that mean I'm trading the dollar short right now? No, because if the dollar is going to hold this level and work its way back up to the range, this is also a risk off environment. Okay. If the dollar heads higher, stocks are probably going lower. Okay. Risk off is nothing's good. Japanese yen stays strong. Swiss stays strong. Dollar stays strong. Risk off environment does not bode well for stock market gains, typically. Okay. Now, what could save the stock market this year? Well, if we have decent enough earnings out of your large cap, mega caps, Fab 5, Fab whatever, who cares what they're called? Mag 7, they're still that. Your top 10 stocks essentially. If they have strong earnings or strong enough earnings and the Fed is officially cutting in September, if we see dollar weakness, I think that gives enough of a formula to have dollar weakness plus good mega cap earnings to stabilize and then let the market continue its broadening and start getting the rotations where things are going into undervalued areas and give investors an opportunity to hopefully generate some alpha. But the dollar weakening, and again, 6 to 8 months forward thinking, if the market's already like, you know what, this dollar pricing, it's due to go lower because the Fed's going to cut by 1%. The Fed's going to cut by 1.5% over the next 6, 8, 12 months. I think that's one way that the market does okay. Right? But why am I watching this? Because this has created a lot of indecision on dollar crosses. I have been stopped out more on little trades this year, like little scalps, little swing trades on the dollar pairs than I can remember in a long time. Usually when I pick a trade and I put capital in the Forex market, I usually don't have a lot of losses. I'm pretty quick to move stop losses to break even or better, trailing stop losses, or I take the position side and I just dollar cost average in really small and build my positions the way I want. But for the dollar crosses, each individual dollar pair has been very challenging because they're going very different ways. Example being the Aussie dollar had a clear sideways range, broke out by a decent amount. I looked to buy the pullback and then continue, and it's completely reversed. So I got stopped out there. The euro dollar had a CPI movement going down, came all the way back up to poke that high, and then turned. Not a ton, but it's turned. It's still choppy. Pound dollar has literally broken highs and lows multiple times this year. It's all over the place. So dollar CAD, I was on the verge of kind of bailing on my dollar CAD trade. Now I'm up 200 pips. So it's just been inconsistent for me, to say the least. So what am I waiting for? A little bit more clarity out of the dollar, possibly getting more positioning on a basket trade with better clarity. I don't have clarity right now. We come below 103.90, I'm looking to sell. Okay, we convincingly get below 103.90, break, retest, go. That area would be a great trade, I think, for a basket trade. If you were short the dollar there's some good opportunity. On the flip side of that, if we have a major risk-off event and the dollar's up here, there's still room for the dollar to get higher as well. So that to me is where I would be long or short in the middle. I'm kind of staying out of the dollar. So that covers dollar pairs. If you want to see euro dollar, pound dollar, New Zealand dollar, dollar CAD, they're obviously moving in certain directions right now. But as the bigger picture goes for the dollar index, to me, it's unclear what the dollar index is actually going to be doing. So that's my wrap up there on the dollar. The yen crosses. I think we can still look at the yen right now. It's like, look, I'm fine with the yen unraveling. It's good as is. This doesn't necessarily do any massive damage to the bigger picture, but yes, it is falling, right? From 162 down to 153. We're down 900 pips. That's good. There's opportunity. I keep telling traders on the yen crosses, if all you're doing is following, okay, my 4 hours what zone? My 1 hour's what zone? My 15 minutes what zone? Trade the alignments. This goes back to literally me trading. When I first started trading Forex, I was learning from a professional that was a day trader. We did 1, 3, 5-minute charts in alignment with a 15 and a 30 and a 60. That was all I looked at when I first started trading. So this is up, and this is up, and this is up. I'm waiting for these to also get up, up, up to take my trades on the day. It's the same thing now. I'm just on a bigger time frame. I'm just on a bigger time frame. If my 4 hours down, my 1 hour's down, I'm looking for opportunities for the 15 to give me a chance to trade it lower. So it's a little bit smoother. It's less noisy. I'm not a day trader anymore, but you can swing scalp this stuff because you've got larger alignments going in that direction. That momentum's pretty strong. So it's a pretty easy strategy to follow. It doesn't really take a ton of indicators. It's just price action based. But if you can see we're going down, we're going down, we're going down. I mean, indicators are helpful for entries and visuals for those of you out there that like moving averages or certain indicators to provide some signals. But point is, alignments are helpful. Now, could we see the dollar yen continue to unravel? Sure, and I kind of hope that it does. Here we are up $1,000. I'm going to go ahead and I think I'm just going to take the profit. We're getting another nudge on the currency strength. So Japanese yen getting up there. I'm going to clear this $1,000 right now. Close. Okay, and I'm going to eat the $100 and some dollar. Let me go. Account balance is there. So what's this difference? 10. I'm going to just go ahead and close this. Close. And see if my New Zealand yen will get a little bit bigger. So let me see if this will go. So I'm at 10,800. Let me put in a stop loss on my New Zealand yen. I'm just doing this for the trading battle. Let me move this stop loss down. Let's see here. Okay. So I'm going to move the stop loss to break even or better. If this thing still goes lower, then let's see this number increase. But I'm going to try to lock in some profit for charity and see where we're at. So I'm showing 10.8 right now. You know what? I'm just going to take it. I'm going to take it. I'm going to call it a day for right now. So $800 from yesterday to today. Not too shabby, but I don't know. I might debate on getting back in, maybe do another hedge. I mean, it's okay. It's just like I'm going to lose one. I'm going to win one, carve out maybe $500 to $1,000 net profit and try to take a couple more trades. So for right now, I'm just going to be flat in those positions and continue to assess. So anyway, back to the dollar yen. I'm not. So we trade those for the trading battle. They give us an account to trade for the battle. But I'm a U.S. trader. I'm with Awanda and I'm with TastyFX. That's as a U.S. trader. Those are my brokers. Yeah, I've always been a U.S. trader. I've never, and I get this question a lot. I know traders out there that are in the U.S. that are using prop firms that offer 201 leverage, and it's this it's this broker, it's this broker. I've never heard of them. I'm very skeptical of using brokers that aren't highly regulated and are doing things that you really don't have normally, permissions wise. As a U.S. trader, I don't have permission to trade 500 to 1 leverage. So if a broker offers that to me, I don't know how they're doing it. Compared to most regulated brokers, that's not something I should be able to trade. My permissions are different than non-US. Okay. So I say that like I have aligned myself with good people in the industry, regulated brokers. The US, we don't have a lot of choices. You have Forex.com, you have Awanda, and you have TastyFX. TastyFX was formerly known as IGUS. So those are your big three, right? As a US trader, those are my options. Deal with it, right? What do I like about each one? TastyFX, I work with the team. I talk to the CEO. Tasty trade stocks, options, futures, crypto, now Forex. I can contact the team. Support is awesome. They've got volume-based rebates. They've got good commissions. They have low costs. Support, like I said, is great. The Plat Tech is awesome. And if I need something, I can go directly to the top, which is super helpful for me. They also are incorporating non-FIFO trading. So if you're a US trader, you can trade different trade sizes. You can also manage non-FIFO. So if I get into trade at 0.01, 0.02, 0.03, I can manage those in any order that I want, close them out as I need to. Okay, but you have to use a new trade size. Awanda, similar situation, but one big perk about Awanda is you can use nano lots. And I don't know if anybody's used those before, but you can trade units as opposed to lots, and you have way tighter control of your equity. So I can do a trade for 1,000 units. I could do a trade for 1,001 units. I could do a trade for 999 units. And it's the same trade size. Essentially, it's going to be like a penny, 10 cents a pip. but it's 10 cents a pip, and the broker identifies those as unique. And so I can still take basically a 10-cent pip, and it's unique for a non-FIFO management. Nanolots. And again, not all brokers offer that. So that is one big bonus for Oanda. But I've also had way more disruption from using them because they shut down their servers. They switch things over. My robot trades on MT4 have been turned off where it switches servers and I have to like liquidate positions and things are stalling. My robots aren't picking up a trade anymore. And that is super annoying to me. So I've migrated into TastyFX as my broker because I can go right to the top and ask like, look, don't fudge with my trades. IG is easy. You have IG Live, you have IG Demo. They have 2 servers. Okay. You look at Oanda, it's +1, +5, +3, +4, blah, blah, blah. It's like there's like 10 servers and they like turn one off and turn one on and change the name. And I hate that crap. So I just want it to be simple. The best thing I want is continuity. Don't mess with my process. That's all I ask from any broker. Okay. It's hard enough to trade. Don't make it harder by, playing some games. Okay. Oanda will switch servers every now and then. Forex.com does it. It's known to do it. I mean, there's these legacy servers that they get rid of. They want to migrate into new servers. And it's if you're just manually trading, it's not that big of a deal, right? But if you're auto trading, when I have robots running, all of a sudden my server is turned on or off and it switches, my robots have nothing to communicate with anymore, right? All of a sudden my robot gets like knocked out and it's glossy-eyed. So my robot stops managing positions. My robot stops taking trades. I don't like that. That can be very costly. So I try to be very cognizant of that. Like I check in my VPSs once a week. If obviously I'm getting emails from brokers, I got to mind that stuff. Okay. All right. Let's keep going. H2 was asking about pound dollar. I already did the dollar pairs. Pound dollar is all over the place. Dollar pairs are not easy to read. All I'm in right now for my trades, dollar CAD's long, and I'm break even or better on that trade. Dollar Swiss, I'm still holding long for a carry trade. Dollar yen short. I've had a robot picking up some short trades for me for the last couple of weeks. And I got stopped out on euro dollar and I got stopped out on Aussie dollar. So I'm in very little dollar pairs. I'm watching the DXY for my bigger moves. The yen crosses, I'm participating with those scalps and those alignments. Other than that, I'm just in Swiss crosses holding long. Okay. All right. Oil. Let's talk oil. Coming back to $77 is pretty good. By the way, if I need to go, James, you need to pop on, pull me off, let me know. But anyway, we'll go here for a couple more minutes. And then whoever the next guest is, I'll pass you the show. Oil, stable here around 77. Global demand is a concern. Copper's down. Oil's been down. I am wondering, is oil vulnerable, or are we doing something along these lines? Is this some type of wedge in oil where there's more and more indecision? I mean, this is still inside of a range, if you ask me. This is still strong support, strong resistance, right? And I can't really, I think that oil is going to be stabilizing and heading higher. But if it doesn't and it comes back down to test, I could see that being a wedge play where it's just back and forth. So I'm long on oil with options. So I'm long here. That's my stop. That's my risk. So if we stabilize in here, price went up, I'm in profit. Price goes sideways, I'm in profit. Price goes down a little, I'm in profit. That's my line in the sand right there. Okay. How does your robot trade? Do you set buy orders and limits? My robot trades a few different ways. I've got a robot that trades basically range trading. So a robot will do this for me if I have a pair that doesn't like to move a lot. It usually, buys support and takes a small profit. And if it hits resistance, it takes a trade, takes a small profit. And each one of these might be like 20 pips, 20, 30 pips. It's really simple. It grinds on currency pairs that I would never do this on my own trading. I'm never going to, go on a 1 hour chart or 4 hour chart and buy these little like pops. And this robot does it. And I only trade on currency pairs that are very efficient and they don't like the trend. They're very low volatility. And that robot has been a really, really good income provider for me for the last, 5 years or so. So that's a fun robot. Current option strategy for oil. Hey, James, how are you, man?
Hey, Chris, how you doing?
Good. Yank.
Appreciate you coming on the show.
Of course.
I know that we'll see you back tomorrow, but not Friday.
Correct.
So, thanks again for coming on. We're going to transition over to James now. We're going to play a really quick break. We got some big news. So, guys, if you missed the beginning of the stream, we got some big stuff going on right now. So, We'll be right back right after this ad. Chris, thanks again for coming on, and we'll be right back with James.
Sure, thanks.
Wait a second. What is that out in the water? Is that a shark?
Yeah, thankfully he only took half off my surfboard.
The markets can be a very scary place. Don't go wading into treacherous waters without your edge finder, which gives you market data like the commitment of traders data, retail sentiment, our top setups algorithm, which generates ideas each day for you, and so on and so forth. If you don't already have a copy of the edge finder, we're currently doing our summer sale, and it is our biggest discount of the entire year, no questions asked. If you're waiting for a better discount, you won't get it. Currently, the edge finder is half off, and for stream viewers who are watching right now, we're going to be dropping a link in the chat as I speak, and that link will take you to a direct message center where you can speak to a rep on our team. That rep can get you 55% off so that you're no longer swimming out with the sharks. Get inshore and trade with the edge finder. Check it out, and thank you guys for watching. Back to the show.
Hey guys, how's everyone doing? Let me just pull the camera back a bit. There we go. Hope you're all doing well on this fine Wednesday morning or afternoon. So today has been quite interesting in the markets. I'm sure the previous guests have already covered it, but NASDAQ had a huge drop. We've seen, obviously, we're in earnings season at the moment. Tesla has undershot. We've got NVIDIA, I think it's on the 15th of August. So yeah, it's pretty busy on the stock side of things, stocks, equities, indices. So NASDAQ currently down just over 3%. So that's quite interesting, which backs up my my potential mean reversion idea that I've been talking about for a while. So if we look on the weekly charts, we can see essentially looking at previous movements on NASDAQ. If we look at the movement here, so this started in March 2020, and then through to December. This was a sort of 57% differential between 200 moving average. So if we measure a very similar thing here, so if we grab 200 moving average from the peak, which was 47.55% differential. Now, moving averages, 200 moving average acts as almost like a magnet for price. It's like they often move in a very synchronized way, obviously, because the moving average takes in the average price. And when price deviates too far from that, it can start inducing selling. And I think that's kind of what we're seeing now. So even on the daily time frame, you can see we had a huge discrepancy, a huge price difference here. So I think this level here, sort of around the 18,400 mark, is quite key. This would be my first sort of area of interest, I guess, to go long. Very tight stop, sort of below this previous wick here, and potentially even lower to allow the 200 moving average to come up. But obviously, we'll see when price gets here. I'm not sure exactly where we'll be in the market by then, but that's the rough idea. And then potentially back up to the previous high for sort of a 1 to 3, 1 to 4 type of trade. However, if this level's blown out, then I am kind of done with this market for the time being. The next level I could really see being interesting is throughout here. So that would be sort of my next major stop, potentially even here as well, but that's less major. But yeah, this level right here would allow the 200 moving average to come up, meet price quite nicely, and sort of sweep up and continue to the upside. But we will see. We'll see how earnings season goes. Let's just see what happens, really. No, I don't trade XRP. I don't touch crypto. So I touched crypto once in sort of the past, I'd say 4 years maybe, and this is how it's turned out. So this is the daily time frame. So this is a meme coin. Of course, it was very, very risky. Didn't really put too much on. It was just a small play for some fun, but you can see my buy-ins here, and then Biden dropped out of the elections, and it's just crashed essentially. So lost some money there, but yeah, overall I don't touch crypto really. It's nothing not any interest to me. So watch list, gold is quite interesting. Actually, I'm considering going short on gold, possibly on this current this current 1 hour candle close. May take a very small position to the short side. And this is purely based on the technicals, not necessarily based on the economics or the market drivers. So if we look at the way gold's been moving, we've had 2 cycles on gold that have been essentially the same. So we created all-time highs. We came down, we came back up. I'm calling this a bull trap because the way I see this, when we have a trend like this, everyone's buying gold. I mean, there'll be certain people trying to short it, obviously, but the majority of people, especially the people that matter in the markets, are trying to buy gold. Price comes up, price comes down. People are trying to buy in. Price comes up a little bit. They get trapped in here and then taken out. And this is why I'm calling it a bull trap for this example. Then we come back down. So we faded this move to the upside, came back down to this level of support. Then we look at the next all-time high. It did exactly the same thing. We come down, come back up, potential bull trap, and then fade down. And now we're in this next cycle here. So we've created these all-time highs. We've come down. Now I'm expecting this pull back up for the bull trap and then a fade back down. But we will see. So this is a big change from what I've previously been talking about on gold, because I've been sort of a big advocate for going long, and I still am long in the long term. So for the rest of sort of 2024, maybe even 2025, I could see gold going higher. But just for sort of a short-term pullback, I wouldn't have any issue entering here. So if we look even at a more basic technical level, we've got sort of a flat high here, came down, created a lower low. Now, is this potentially a lower high? And this is also right off the fib, sort of 50% level pullback. So technically it looks great. And for this, I'm more than happy to take, again, a very low risk position and try and profit off the current people that are closing out of gold from these all-time highs. But we'll see. I'm not sure if that one will work out. I mean, it's quite high risk, in my opinion. I think gold is a little tricky. So dollar, let's see. So yeah, I think I spoke about this last time I was on, but I don't know how many of you were here for that. The dollar had a really nice weekly close last week. We see this hammer closed here, right off this level of support. But as for the short term, let me delete this. So for the short term, it's not looking too good. Look quite bearish, really. So I would expect, I am looking really for a higher low to get formed here and a continuation to the upside. That's really what I would like to see on the dollar. However, if we'll get that or not, I don't know. We'll see. I'm not here to predict, here to react. But yeah, we'll see. I would quite like to see a retest of this previous high. And that would be sort of, something along these lines, and then potentially a lower dollar. But yeah, again, it depends quite heavily on the elections as well. We've got those coming. I think it's start of November, so we're approaching the elections quite quickly. So yeah, we'll see about that. So I'll do some chart requests in a minute. I'll just go over my watch list. I'm actually not really in the markets at the moment. I'm taking a break from trading until sort of the start of August. So we've not got much longer left of July. I'm going away at the start of August. So sort of not really looking to open anything for now. I had to liquidate some positions this morning, which was a bit painful. It was my biggest loss of the year. I'm going to make a video about that on my channel. Transparency, full believer in that. But that was quite a large hit to the portfolio. When I say large, it's not like, it wasn't anything too major, but considering that I'm quite conservative at times, it was a lot larger than the majority of my losses normally are. So yeah, that was kind of the sign for me to get out of the markets, just take a break and come back with a clear head. So yeah, only other thing that's really interesting me is actually the New Zealand dollar. So as I said, I quite like the idea of a bullish dollar, especially for sort of the next couple of weeks. But yeah, again, we'll see about that. But looking The New Zealand dollar, it looks great. So the New Zealand's lost a lot of strength along with the Australian dollar because of the Chinese rate cuts. If you don't know, Australian dollar, New Zealand dollar, very, very dependent on the situations in China. So that's a great factor for this to go short. So I'm just looking for some sort of pullback. And where this will be, I don't know. I'm actually going to set another alert here at the 50% pullback. So you can see I've got one level of interest here, which was sort of the first support that got used. So I'm looking for a potential retest of there. Then there is the support right below it through here. And again, that would be a great area for price to come and retest. And then there's also this 50% level. So I'm just going to have to set some alerts and gauge how price is acting when it, or well, you know, when or if it reaches those levels. Euro dollar was interesting, actually. What I can do is show you my euro dollar position that I closed out of yesterday. Just give me a second. Let me pull it up. So this was probably my best trade of the year. Not necessarily in terms of profit and loss or realized gain. It was more just the execution. So if we look, this entry on the 30 minutes was almost, well, it was perfect. You know, it couldn't have been any more accurate. And I scaled it and closed out down here. So that was, you know, quite a nice way to sort of end the month. Other than my realized losses on some yen pairs, but yeah, that's that. So in terms of the future for the euro dollar, I'm still looking to go short. I would just like to see a little bit of a higher price. So if we look on the weekly, let me remove this fib. If we look on the weekly, we reacted really nicely at this level of weekly resistance. We closed with a really great sort of, I think it's called a doji or a hammer, or whatever these are called. Really nice closure off there. Also held below this 200 moving average, which on the weekly is very, very significant. So this overall, you know, downtrend, I guess you could call it, because price is below the 200, has held. Also, Credit Agricole is targeting the 1.05 level sort of by the end of Q4. So that's the end of 2024. So this is a potential target for me, which is where I'm looking at. So sort of along here. But yeah, we'll see. Just not quite ready to enter yet. I think we could see a potentially higher prices. The dollar is falling a little bit now. I'd like to sort of just see how the dollar reacts at this level, see if we can get a bounce to the upside. And then I may consider entering into euro dollar short. But yeah, that's it for the watch list. As I said, it's quite quiet at the minute. Not too interested in opening any new positions other than a potential New Zealand dollar and maybe a small gold short. So pound CAD, we can take a look there. So we did have CAD news, actually. As I said, I'm not too interested in the market, so I've not really checked up. Let's see. So we had interest rate decision, 4.5. So it came out at consensus. So that's fine. We had monetary policy report statement. Interesting. So I need to have a look into those. But yeah, I assume that's why we had the CAD weakening quite significantly this morning. Overall, I think that this is fine to go long. Actually, I'm quite bullish on the pound in the short term. Overall, I actually really don't like the pound. I really want to see the pound get demolished, to be honest. And I am looking for that to happen sort of towards 2025. I'm going to start initiating some short positions on pound dollar. But for now, it's not quite ready. I think the pound still has some steam left. As for entries into the pound Canadian, I don't know if we'll get this 50% pullback. I think that's quite a bit too optimistic. I don't really see that happening. So I think I would actually stay out of this for now. As I said, I would be looking for long positions. It's just not great. I don't think that 50% pullback is going to happen. I think that's too low for price at the moment. However, there is nowhere else that really interests me. We've got this. That's way. There we go. We've got this level of support that's now formed. So this may be sort of the only place that would interest me to go long, sort of off here. But yeah, other than that, not really too much. Let's see. Yeah. So that's the only input I can really give you on this market. Pound CAD isn't something that I look at too often. It's not a huge market that I'm interested in, to be honest. James, you are the best. Thank you. I'm a bit down today after my hit on the portfolio, so that's nice to hear. In fact, you know what? I'll show you. I'll show you that loss here. So this was the loss. So it's like I said, it's not a huge loss. It's not gonna, I'm not gonna go homeless. I could still pay my bills and things. It's not a huge issue. It was more just one of those things of I was very, very confident and I got bitten for it. And that's one of those things, traders make mistakes, and I'm here, I'm willing to hold my hands up and say, okay, I really messed up on this one. And again, it's not necessarily the monetary point of a mess up. It's more my idea just was very wrong and I was really off. And that to me is horrible, because I like to be very involved with the economics, with how the markets are moving and what's going on. And for me to get something this wrong, it's just, it kind of hurt my, I want to say ego, but it kind of put me in my place. It humbled me a bit. So that's why I'm taking a break, because I'm a bit annoyed. I'm a bit annoyed at myself for this. So yeah, I'm going to walk away from the markets, go away at the start of August, and come back with a fresh head and just let the markets sort of do what they need to do in between then and now. And I can come back with fresh markets, fresh head, and do, research what needs to be researched. But yeah, it was an Australian yen position here. I initiated this long position and it just really didn't work out. So that is basically what makes up the majority of the loss for this month, but it's fine. I've had a pretty bad month trading, but you know what? I recognized the issue. I put a tweet out about it this morning, basically saying the problem that I had this month was that I just wasn't keeping up with the markets enough. So I run Elite Traders. I trade. I also do some other things on the side. I've got some other businesses. So that sometimes takes a lot of my attention away from the markets, which can then obviously impact my trading abilities, which is rare. It doesn't happen very often. It's not happened for a very long time, which is why I was caught off guard this time. But that's, being an adult and being a trader, you've got to just accept these things and realize that's just how things happen sometimes, unfortunately. How you explain market structure on a channel is the best video ever. I appreciate that. It's probably the most basic video I've put out so far, but I tried to make it as simple and clear as possible, so I appreciate that. So yeah, I can go into that trade a little bit more if anyone's interested. So you can see my buy positions here. I've still got one position running on the Australian yen, which is here, is this last one. So these first two I had to liquidate, which were, not great. So, again, that's part of it. I'm not going to sit here and say, I had this amazing euro-dollar trade with perfect entry and not show you my losses as well. That would be very disingenuous. And especially because I sell a service, I think it's very important to show you everything, really. So, it is what it is. I made a mistake. Hold my hands up to it. I was wrong. So, yeah, still got one position running. The initial idea behind this really was, if we look at the interventions, so that trade was based off the intervention. If we look at interventions in the past, it's not normally this deep. It's not normally this aggressive. And the reason that we've had such an aggressive move is because the BOJ is quite hawkish at the moment. I think there's something like a 90, either high 80% chances or low 90% chances that there's going to be an interest rate hike by the Bank of Japan. So obviously that's causing a lot of people to start closing short positions on the yen, start potentially opening long positions. Is putting a lot of pressure on the yen pairs on top of the intervention as well. And I just didn't foresee that coming at the time. So yeah, that's what happened. But yeah, the initial idea was to sort of open some positions, let the market sort of go lower, DCA it, and then take some profits off, which is what I did with euro dollar, and that worked out great. And it just didn't work out on this one, but there you go. So, as I said, that's as transparent as I can be. We do have a position on the euro pound at the moment that's currently running. So we had a really nice pullback, and I was really late to this one actually, but this was a really nice trade. I should have really, oh, sorry, I've drawn that a bit wrong. It should have been here. Should have really entered off this previous high. So this is the way I trade. The market's in a downtrend. We had a 50% pullback or to this fib golden zone, lined up with a nice level of sort of structure throughout here. This would have been great. So I'm still in the market, but a bit of a later entry than ideal. AUD is weak due to Chinese economic data, I guess. Yes. So we had surprise. I can't remember what it was actually. I've got it written down here somewhere. Surprise data came out of China that affected the Australian dollar and the New Zealand dollar as well. So that was a bit of a hit to that trade on top of the yen news. So yeah, just in the wrong market, the wrong time, wrong idea. But yeah, if there's anything you guys want me to look at, let me know. More than happy to go over some things. Let me see. I was also in the US 30 Dow Jones market. This live stream is making me look really bad. Actually, I'm just talking about all the losses. But hey, that is what it is. So again, same thing. We had bullish market, almost a pullback to the 50%, but we had quite a lot of rejection at this 50 EMA, along with the RSI becoming oversold. So this wasn't a big trade. This is more of a little stab at this market just to see if we could get a reaction off here, and we clearly haven't. So now I'm looking potentially to reevaluate, but we'll see. Again, I'm more looking to take a break rather than trying to open new things. But this level looks really strong. So this is obviously on the 4-hour time frame. We've come into this fib golden zone. We've got previous structure throughout here. The market's still bullish. RSI is oversold. Technically, it looks great, but just keep in mind we are still in earnings season. So the market could just keep plummeting down if we continue to get some poor earnings results. Sterling Saboteur. Transparency is great from traders like yourself. Consider me subscribe to your channel. Lee, I appreciate that. Thank you. We could take a look at oil for sure. This is the wrong one. Let me pull up my oil 1 sec. There we go. So yeah, I mean, I'm a bit salty that I didn't enter this. Actually, I was looking at this short position. One of my members in the Discord pointed this out. It didn't quite match my personal trading rules, so I sat out. But it did work out really, really well. So one of those things. Miss a good trade, have a bad month. It is what it is. But yeah, I think again, I'm not too sure really what the situation is with oil right now. Let me have a quick look at the OPEC news. See if there's anything new on here. Oil drops as investors look past Biden exit, focus on weak fundamentals. Oil falls more than $2 as investors eye Gaza ceasefire hopes. WTI gains more than 2% on big US storage withdrawal, weaker dollar. So it seems like the narrative at the moment is quite bearish for oil. But again, that's just quickly looking at some headlines. However, just using that, if we were to look for these short positions, I'd be looking for a pullback from previous high to the low, potential pullback into this level, lines up again really nicely with the previous low, creating a level of support. So this looks quite simple. Actually, we've got these previous resistance turn to support. Can we get this break and retest here? We will see, and take profit down at the fib extension. I think this looks pretty nice actually. I may take this. I'll set an alert if we do get something like this. Set an alert there, but again, I'll need to research exactly what's actually going on with oil, because a bit behind on the commodities aspect of things. But yeah, I think technically perfect setup. So we will see how this one plays out. I'll add this one to the watch list actually. There we go. USD Swiss. This one looks really nice. No longer looking to go long on this one. But yeah, I think this one is great. So I was actually short on this position. I can't remember where I was short. I think I was short from here. I had a really tight stop. It was something around here. Unfortunately, stopped out and missed the big move. But yeah, you know, what can you do? So yeah, just looking for a potential bounce off this level, and then maybe we could enter in for a short. So let's see. So again, actually, if you guys don't really use the fib, this is another really strong example. So we draw it from the high to the low, and you could have caught this potential move to the downside here, obviously using this golden zone. But that's hindsight, so who cares? But yeah, we could maybe see a bounce to here and possibly get a small scalp or a sort of intraday trade back into this level of support. So if we could get something potentially like this, and then we'll see. I didn't know anything about fundamentals. You guys are good, free education every day and transparent, perfect psychology, great. Smart trader, good stuff. This is Trader Nick's channel. I don't know if, I mean, it sounds like you're a new viewer, but yeah, Nick puts out great content. He has some great guests on as well, so definitely worth watching this channel often. But yeah, I think, to be honest, I don't really have anything else to discuss with you. We can have a quick look at Edgefinder data, and then I might call it a day. So we can see what's, let me just refresh this, see if anything's changed. Cool. Okay. So pound CAD, dollar CAD. Yeah, it seems like CAD is currently quite bearish. Pound US dollar, yeah, looks good. Dow is bullish. So if you were looking earlier with me at the Dow position with the structure and the fib, it could be, you know, quite good. Data backs this up. It's got a score of 9. COT is 2. Seasonality is 2. Trend, GDP, yeah, GDP is fine. PMI, retail, yeah, looks good. Actually, I may take another small stab at Dow and just leave it to run while I'm away, see what happens. Gold is bullish, but it's not overwhelmingly bullish. So it doesn't really sway my idea of a very short-term sell position. Russell actually is quite interesting. I've not looked at the Russell for a while. I was looking at it last time I was on the stream, and yeah. So it's not had this deep pullback yet. So I was looking for a 50% pullback, which came very close, but it didn't quite get there. However, we are creating a potential lower high here. So yeah, I mean, I don't counter trend trade, so I wouldn't short that. I wouldn't short it here. But you know, if you are happy to check counter trade, you could potentially look for a short here. This is a 50% pullback and a lower high, which is something to keep in mind. But as I was saying, the Edgefinder is very bullish. By the way, guys, I don't think I mentioned it before, but I do have a code for Edgefinder. So if you guys want to use it, it's just ELITE, ELITE. That would be great. I think it helps you guys as well. I think there's already a huge discount as well on the Edgefinder at the moment. So dollar yen's bearish. I hate to see this because I'm still on some yen pairs, so that's a bit painful to see, but it's fine. May have to start hedging these actually and going long on the yen because there's I think there's interest rates coming up. Could you look at pound Swiss if you don't mind? Yeah, we can have a look at pound Swiss. While I'm here, we'll just put Edgefinder for pound Swiss. Was it pound Swiss? Yeah, okay. So edging on the bullish side, but not overwhelmingly bullish. Interesting. Let's see, actually, because the Swiss was getting sold a lot by COT. It still is. So actually, it does look quite nice to go long. We are seeing a nice pullback here. So let's see what we can get. Currently at 50% pullback level. Let's see if this lines up with anything. I wouldn't mind potentially entering a very small position here and take the trade back up to the previous highs around here. But yeah, I'm not super convinced right now. I normally like to wait for a bullish or bearish candle close. In this case, it would be a bullish candle close. So I wouldn't be entering right now, but I would be keeping an eye on this area to see if we can get a bullish engulfing candle close. And then that may be the trigger to go off and start looking for some long positions. But yeah, for now, kind of sitting on my hands. We can see actually what daily. Yeah, daily looks quite nice as well. This looks like a very healthy pullback. We're not too far away from 200 moving average. We've just bounced off here. Stop loss could even be below the 200 moving average on the daily. So this would help reduce a little bit of downside risk. It would obviously then add in the 200 as a dynamic level of support. Yeah, not too bad actually. I mean, you can argue if this level is valid enough. For me, it's not super great, but again, worth maybe a small little position just to test it and see. But yeah, okay, guys, I think that's about it. Seems like a quiet chat. Not too many questions, so I'll head off. Like I said, there's not too much on my watch list. You know, I'm going for a little break, so that's that. So yeah, I will see you guys very soon. Thank you for having me. I hope it's not been too depressing hearing about my my bad month of trading, but hopefully next month I can come on and show you some great results. So we'll see. But yeah, have a great day. Enjoy the rest of your weeks. I will see you all very soon.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.